robotics generally, actually, autonomous vehicles are robots, but in terms of robotics in the way you and I have understood that category historically, Teradyne is our number one pick. And most people don't know Teradyne as having anything to do with robotics, but they bought a company called Universal Robots from, it was a Danish company. And that has, it's a small part of their revenue base right now, but costs of industrial robots are dropping, especially collaborative robots or cobots, to such a level. We think that the cost of one of these robots within a few years will be $10,000, $11,000, and so very price competitive for menial jobs where there's probably a shortage of labor. Let's hope there is a shortage of labor in the next couple of years as this economy rebounds. 3D printing is a big part of that fund, so you'll have Stratasys in there, Proto Labs, which is a quick turn manufacturing company, which also is in the 3D printing space, as well as Materialize, which is software in the 3D printing space. 3D printing has been held back by autos in particular, and now aerospace, but we think a crisis creates opportunity, and that it is going to accelerate the demand for 3D printing.
Where are we on 3D printing? Because 10 years ago, it was such a huge thing. I did so many stories on it, and we had a major problem 10 years ago. There was nothing to invest in. You know, you mentioned about Teradyne and the robotics firm, small part of their revenues. There was almost no pure play. Well, there was Stratasys, but there weren't many back then. And yet the news on it has kind of died down. I have friends that are in the old car business. They like buying muscle cars in the 60s and 70s, and apparently it's a revolution. You can now buy 1969 Camaro parts that are essentially made in 3D printed. You can buy carburetors or things like that. This is what I am told, and so it's transformed that business, it seemed. But how is it changing industry? Is it really going to break through now?
Yes, it is, and you asked where it is. It's in the valley of despair. Many stocks are down 80 to 90% from their highs because their focus was on the consumer space and not on the industrial space. Aerospace, aerospace companies like Boeing and Airbus, their gross margins are in the 15 to 20% range. 3D printing, now that the FAA is approving it, 3D printing can cut those costs by up to 90%, as well as lower the weight and form factors of the various parts in engines and shrink the number of parts. So aerospace, we think, given the turmoil and trouble it's in right now, it is going to seek out even more aggressively some of these new technologies that are going to help it get back to profitability.
And is this feasible now? I mean, I know, like I said before, my friends are telling me, like old cars, you can get 3D manufactured auto parts, but that's a big thing, big difference between that and a jet engine manufactured in 3D. Is this a feasible technology? Is it being used now?
Oh, definitely. Like it is absolutely feasible. There was a showstopper there for a while. The FAA was very concerned and needed to scrutinize every part, every material. But now it is seeing, proof of concept and has become much more accepting of 3D printing. It sees the stress that aerospace companies are under, and so I think we're going to see a lot more approvals of different materials and a lot more companies starting to service the aerospace world. The other area that 3D printing has changed completely is in the medical space, hearing aids. I think 95% of all hearing aids in the world are 3D printed. Well, there are many medical many medical applications, ultimately hips and knees and, that are going to submit to 3D printing because 3D printing allows for such incredible customization. So it's perfect for the high value medical space, for aerospace and autos. And autos and aerospace in real trouble. They are going to be turning to new technologies that are going to help them lower their costs, lower the fuel consumption in terms of weight, and ultimately create different form factors. When we go autonomous, we're going to see that some of us might want to take an autonomous vehicle from New York to Boston and be able to sleep in it, whereas others just want to get across town, and it can be a very much smaller, or across campus, it can be much smaller. So we think that entire autos ultimately will be 3D printed.
Do you have any plans or thoughts about adding short positions to one or more versions of your funds?
Well, we have internally for employees only. We're testing out a portfolio, but it's really ARC on steroids, if you can believe that. We don't think we want to test it out on ourselves first and make sure that everybody keeps their eye on that 5-year investment time horizon, which is our time horizon, and doesn't pay attention to the day-to-day, because what we would be doing is shorting stocks that are in the big benchmarks. And when we get into a risk-off situation, what happens is portfolio managers and analysts generally run back to those stocks, get closer to their benchmarks, and they dump our stocks, which are either small parts of benchmarks or not in benchmarks. Great opportunity for us, as we have experienced during these last few days, to pick up on those stocks, because it's simply a risk-off move to get closer to benchmarks. And by the way, we think the benchmarks are where the big risks are longer term, because they are filling up with value traps. Those companies that have done very well historically, but are going to be disintermediated and disrupted by the massive amount of innovation that's taking place. Just to give you one number there. Right now, we believe that innovation, truly disruptive innovation, is priced in the global marketplace, public markets, at roughly somewhere between 10 and $15 trillion. In 10 years, we believe that number will be 200 trillion. So it will go from a little more than 10% of global equity market caps to what we believe could be more than half. That's how much disruption is evolving thanks to DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology, all of which are converging so that S-curves will be feeding S-curves. We are on the threshold of the most innovative period in history, bar none. You have to go back to early 1900s, telephone, electricity, and automobile to see anything like it. 5-year investment time horizon is critical. The next 5 to 10 years, we think, are going to be spectacular. Will there be volatility? As you say, ARC already is a volatile strategy. And that is why we say, keep your eye on the prize. 5 years, the world will look nothing like it looks today. And we're invested in all of the disruptors, the winners, that are going to disrupt the traditional world order.